Up next is a special. The special on the economic crisis, saving our economy, what's next? David Asman anchors this from New York. I contribute with the Washington side of the story. It really breaks down the whole issue. If you haven't seen this, you don't want to miss it because it really explains things from the beginning. Tune that in right next after this show. And you don't want to miss Mike Huckabee's new show. We talked about it earlier. Huckabee with Mike Huckabee. What a great title. 8 Eastern. A fun show, even a little band in there. I'm going to be tuning in. I'm Bret Baier. Thanks for watching the Fox News Channel. Real journalism, fair and balanced as always. We're going to cover every side of this election. Fair and balanced, both campaigns. And we have the next presidential debate from Nashville, Tennessee on Tuesday night. Brit Hume will anchor that coverage. I will be anchoring the coverage online, Fox News Channel, basically online, foxnews.com. You can tune in there as well. Thanks for watching. Enjoy the rest of your Sunday.
The economic crisis of the century. Our entire nation at risk. Who's to blame? How to fix it?
You can come in and make every excuse in the world, blame everybody else in the world, and then call
I'm
me
not going to be
boring.
bullied by your ranting. A Fox News Channel, Fox Business Network joint investigation. Saving our economy. What's next? On Wall Street, here's David Asman.
For weeks now, our leaders have told us our economy, maybe even our whole way of life, is in danger. The culprit, an economic crisis so vast and complex that few of us can understand the details. We've seen the finger-pointing, greedy Wall Street CEOs, wink and nodding politicians, hapless regulators asleep at the switch. And we're presented with a horrifying choice. Full-scale economic collapse or $1 trillion rescue plan that could burden us financially for decades. How did we get here? Will the politicians' fix work? Or will they be asking us for another trillion down the road? What does it mean for the agenda of the next president? Let's start by going back to the roots of this crisis, which, it turns out, are tangled in the recovery from America's last epic financial disaster, the Great Depression. Up first, Chief White House correspondent Bret Baier from Washington.
Mortgage defaults. Major financial institutions going belly up. Declarations of an immense economic emergency. Connecticut Senator Chris Dodd called it an economic maelstrom.
Our collective confidence in our nation's future has been badly shaken, and that needs to be restored.
Treasury Secretary Henry Paulson warned the financial security of all Americans is at stake.
The events leading us here began many years ago, starting with bad lending practices by banks and financial institutions, and by borrowers taking out mortgages they couldn't afford.
The White House called it a once-in-a-century crisis in our financial market.
The market is not functioning properly. There's been a widespread loss of confidence, and major sectors of America's financial system are at risk of shutting down.
That would put the danger we face today on par with the Great Depression. It lasted a decade and spawned the New Deal, the greatest expansion of the U.S. government in history. And part of that legacy is at the root of the current crisis. The Federal National Mortgage Association, better known as Fannie Mae. Created in 1938, the idea was to help out people with their mortgages and thereby increase home ownership.
Fannie Mae came out of the New Deal. In the New Deal, Roosevelt said more Americans should have housing. That was a good idea.
Amity Shlaes is a senior fellow at the Council of Foreign Relations and author of The Forgotten Man, A New History of the Great Depression.
You know, you think of the movie, It's a Wonderful Life. There wasn't enough credit. The one mean banker wouldn't give you the money for your house, and the whole town would go down. So they'd say, where else can we get the money? Nowhere else but the town. So Roosevelt said, everyone said, let there be a market in mortgages. And that's what Fannie Mae does. It creates a market so you can buy and sell mortgages and there's more cash available.
In 1968, Lyndon Johnson and a Democratic Congress were in the midst of another huge expansion of the federal government. The array of new social programs known as the Great Society. In that year, LBJ privatized Fannie Mae.
Lyndon Johnson spun it off. He said, we don't want this in the budget. We don't want it to show. And he said, this can thrive as a private company. But it was a form of hypocrisy because Fannie was part of the government still. Government was always in the shadows behind Fannie, ready to bail it out, and everyone knew it. You could see it in the price of its stocks and its bonds.
After it was privatized, at least on paper, Fannie Mae was so successful that in 1970, the Federal Home Loan Mortgage Corporation, better known as Freddie Mac, was created to give Fannie Mae competition.
I was the general counsel of the Treasury between 1981 and 1985, and Fannie Mae was growing at that time. And one could see, even then, that this was going to be a big problem.
Peter Wallison is now an expert on banking, insurance, and Wall Street regulation at the American Enterprise Institute.
When we have these organizations that are backed by the U.S. government, they will take risks that no other organization can take.
And the risks kept rising over the years, in part because the federal government wanted it that way. In particular, there was the Community Reinvestment Act, or CRA, passed in 1977 during Jimmy Carter's first year in office. The law increased oversight of financial institutions to ensure that they were giving credit to low-income families so that more people would have the chance to own homes.
We want to have everyone be able to buy a house anywhere. We're going to lend to people of all colors. Nothing wrong with that. We're going to make sure those banks do it and they don't discriminate. But the law went overboard. Institutions made loans they probably didn't want to make because they couldn't seem racist. You might not be allowed to do things you were going to do regular course of business, such as merge with another bank. It empowered these community groups who would then bully the banks. Acorn bullied the banks.
Indeed, ACORN, the Associations of Community Organizers for Reform Now, would before long come up with a new tactic, challenging a thrift merger in Illinois, claiming they didn't make the kind of loans that ACORN felt were required under the CRA. The bank complained such loans would be financially irresponsible. A young community organizer named Barack Obama worked closely with the ACORN activists behind the new strategy. And that strategy worked. ACORN prevailed in court, and soon credit standards were being lowered across the country. While at first Fannie actually resisted buying up some of those shaky mortgages, at the tail end of the Clinton administration, Fannie Mae was told to substantially increase the percentage of those mortgages in its portfolio.
As Congress wanted them to do it, they went ahead and bought many of these loans, including many CRA loans. They packaged those loans, they sold them, but the most important thing that they did was signal to the market after 2004 that they were ready to buy. And there was all this money available that Fannie Mae could raise because they had unlimited amounts of money because of their government backing. And all this money was available then if you could find subprime debt, subprime mortgages, and sell them to Fannie Mae.
Supporting affordable housing just sounded too good to pass up. There was little resistance. In communities like this one in Washington, D.C., tens of millions of dollars poured in with the backing of the federal government. Real estate developers were thrilled. So were mortgage lenders, who are now collecting more fees from new homeowners who could have never qualified for loans under traditional lending standards. In the closing months of the Clinton administration, the Department of Housing and Urban Development actually told Fannie and Freddie to increase loans to risky borrowers until they totaled half of the portfolios of those institutions. Fee-hungry mortgage lenders eagerly complied. And they applied the same lower standards in low-income communities like this as they did for speculators in vacation condos and multi-million-dollar mansions.